Hi guys, welcome back to my channel. For those of you who are new, my name is Sabine and I am coming to you today with a video that has been highly requested for the last several months, and I apologize to those viewers who have contacted me about this, that it has taken me this long to put it together. Anyhow, I finally have it for you and I hope you find it useful. So I'd like to start off with a disclaimer. I'm not a mortgage specialist. I am not a financial advisor. I'm not a real estate agent. I am nowhere close to that industry. All the information I have for you today is what I've learned throughout our experiences of buying and selling our properties, as well as what I've gathered through Google and speaking with friends and family who are in the industry. So there are many of you who are not already in Canada. You are overseas and you're looking for information as to how to purchase homes in Canada. So I'm going to cover off the basics of how mortgages work here, as well as what you would need if you are someone who doesn't have Canadian credit history and things like that. So we're going to first start off with the extreme basics, because I had this question asked from me. What is a down payment and what is a mortgage payment? So what is a down payment? Down payment is the portion of the home's purchase price that you pay up front when you are making the purchase. The more your down payment is, the less you will have to borrow. Which leads me to the next point. What is a mortgage? Mortgage is the money you will borrow from the lender, in most cases banks, to help cover the balance owed on that purchase. And mortgage payments are usually made up of a principal amount and the interest. Principal is what you are borrowing, and interest is the fee that the lender would charge you on top of that principal for lending you that money. So what that means is when you're purchasing a property, there's a certain amount of money that you have to pay out of your own pocket, and then the balance that is not covered out of your pocket is something you would borrow from somebody else, and that would become your mortgage. So how much down payment is required? In Canada, the law is for any property under $500,000, the minimum required down payment is 5%. For properties that are between $500,000 and $999,999, so just under $1 million, the first $500,000, the minimum requirement is 5%, but any amount after that is 10%. So you would have to split it and calculate that. So if your property is $700,000, then $500,000 would require a minimum of 5% down, and then the additional $200,000 that makes up the 7 would have to be 10%. And then a minimum for any property that is $1 million or above is 20% down payment. So here is a sample. In this property, it's $500,000. 5% of $500,000 equals to $25,000. So your down payment has to be $25,000, which would make your mortgage $475,000 to cover off that balance and make it a full $500,000. Your total payment on a monthly basis would include your principal, your interest, plus default insurance. So I'm going to get into default insurance in a little bit, but that is what you would be paying on a monthly basis if you put down 5%. 20% on $500,000 equals $100,000. Your mortgage balance now goes down to $400,000. Your monthly payments would include your principal and your interest, and this in most cases would not have default insurance. Third scenario here, I'm talking about 35% down, and I will tell you why in just a moment. If you put down 35%, of $500,000 equals to $175,000. The mortgage balance now becomes $325,000. Your total monthly payments would include your principal, your interest, and your default insurance. Now, this is not for every case. This is for specific cases. So I'm going to talk a little further on that. What is default insurance? For any of you who don't know, default insurance is an insurance premium you pay on a monthly basis to the lender to ensure that you don't default on your payments. So if you miss a payment, your default insurance would kick in and cover the payments. Okay, so how can I qualify for a mortgage? A normal circumstance, when you're applying for a conventional mortgage, you would ideally want to have 20% down payment. The reason you want 20% down is because anything that is less than 20% down would require you to get that default insurance. If you are able to put down 20% of the purchase price, then you no longer need to get the default insurance. It just shows a lender that you are less risk. The main criteria for your conventional mortgage is that you are able to put down your minimum required down payment. Like I said, ideally 20%. And you've been steadily employed for a minimum of 2 years, and you have a good credit history. That is for your conventional mortgage. So that's the kind of mortgage that the average Canadian will try to go and get. Now, I mentioned 35% down payment. The reason I did that is because if you're getting a conventional mortgage and you're your average citizen here, putting 35% down is great. You will not be charged default insurance for that because you're just putting down more money and you meet all the regular requirements. But there are certain scenarios where you are required to put down 35% because of your special circumstance. And this often will include newcomers to Canada or people who don't have good credit history. But there is further criteria if you don't have proven credit history here. One is you must have immigrated within 5 years. You must hold a permanent resident status. You must have 3 months full-time employment or 2 years self-employment. You may possibly require a letter of reference from the bank from your home country. And you also might be asked to show upfront that you have enough money to make at least 12 months of payments, and that money should have been in your account for at least 90 days. Now, it all depends on the lender that you're working with. Not everyone may have that exact same criteria, so it is best to go and speak to somebody and find out what they would require from you. These are just general guidelines. So those are really the basics you need to know. Is in any scenario, you would hope to have 20% down payment. You don't normally want to work with less than that because there's just so many other things you would have to prove to a bank or whoever you're lending from or borrowing from, as to why they should trust you to make the payments. And then there are the specific scenarios where you may be asked to provide 35% down payment. So you should just be mentally prepared for those numbers in mind. What else can I tell you? This is actually a question that I had asked me, is what further information can you just give us in general? So one thing I did want to mention is Canada's main credit companies are Equifax and TransUnion. Those are the two main ones that we use here, and they do actually have offices all around the world. So you might actually be able to get some of your credit history from your home country if they have TransUnion or Equifax branches in those countries. So there are some additional supporting documents you can get. There's no guarantee a lender will accept them, but they might use it to assess whether you are a high risk for defaulting or not. One of these is a 12-month payment history for your rental. So if you can prove to them with bank statements and a letter from your landlord stating that you've been making your payments every month on time, then that is a supporting document. And also same goes for your utilities. If you have auto insurance or cable, hydro, any one of those things, keep those bills with you showing that you have been making your payments regularly on time, and get a letter confirming that from the service providers. Like I said, they may not take it as official documents, but they might use it to decipher whether you are someone who is reliable to make the payments or not. So that really in a nutshell sort of covers the basic requirements for mortgages here in Canada. Like I said, each circumstance could be unique. So if you go in, they might tell you more. Like the lender will be able to give you information as to what they might require from you. So I do hope you found this helpful. And of course, if you have any questions, please do ask me in the comments. I tried to cover as many of the questions as I could. I might have missed something. So if I did, please just let me know down below. So I just wanted to provide you with a quick checklist. Buying your first home or buying a new home, whatever it is, it's always a very exciting time. I know it can be stressful, but in the end, the reward feels amazing. So here is a quick checklist of the process that you can use to make it a little bit easier for you. So number one, figure out what you can afford. In order to do this, first break down all costs associated with purchasing your home. Now, depending on where you live, Canada is huge and property values in different provinces and cities are very different. So I always say once you figure out your budget, if you realize that, hey, we're in Toronto and Toronto prices are insane. Toronto and Vancouver are very expensive to live in. And there's nothing holding you to those cities. There's no reason why you can't explore living in other areas of Canada. We are now in Winnipeg. We're from Toronto. After coming here, I really don't see why people are so hung up on being in those cities unless you have family there and unless your job is there or your schooling is there or something is there holding you. Venture out, go explore more of Canada, go see where you could possibly live. You might find that your cost of living in another part of this country will be easier for you. Anyways, I'm getting sidetracked. So going back to what I was saying, first break down all the costs that would be associated with your home. So if you're purchasing a condo, look at the purchase prices in the area that you want to live in, and then figure out, okay, well, with a condo, you have maintenance fees, you usually have your annual parking fee. So those fees are associated plus property tax. If you are purchasing a pre-owned home, so a home that's already built and existing, you would look at the purchase price, the utilities, the property taxes, and general home maintenance costs, as well as, of course, closing costs when you buy a home, right? And if you're looking at a new development, again, you're going to look at the purchase price, the utilities, the property taxes, and then often in new homes, you don't have landscaping done, or they don't have fences built, they don't have the driveways done. So those are all things that you would have to pay out of pocket. Often they don't have appliances, you have to purchase those. So all those things you need to look at and really sit down and figure out, okay, so if we want to buy a home in a new development, we might have these costs. How much can we afford to buy? Next, decide what area you want to live in, what type of homes that are in that area. So this will require some research. You don't necessarily have to go out, but you can sit there online, go on Google, go on realtor sites, and start doing some research. Oftentimes people think, hey, I want to live here. I don't want to live anywhere else. And then they start doing the research and start to realize, hey, you know what? I could get a much bigger place with cheaper property tax and this and that if I just go out 15 minutes north or 15 minutes east. Or so sometimes when you start looking in the area that you've always wanted to live, you will start to realize that, hey, you know, we can actually get more value for our money if we live somewhere else. So that's why that research is very important. Speak to a mortgage specialist. That's one really simple thing. Make an appointment and just go in and speak to the mortgage specialist at a bank. They will be able to answer all of your questions and you can tell them in confidence what your situation is and they will be able to guide you. And that way, even if you felt like, okay, I wanted to buy a house next year, but according to what the mortgage specialist is telling me, we're not able to afford it next year, at least you know, okay, you know what, next year is not gonna work, maybe 2 years down the line, but it will help you plan. So always go and speak to them. And once you're there, you can also apply for a pre-approval. If you get a pre-approval for a mortgage, then it will just make it easier for you to know what type of budget you are working with. And this one, I can't stress enough. I don't think necessarily people will tell you this one, but I know this one from personal experience. Find a good real estate agent. We have worked with many. We have bought and sold multiple properties. And I can tell you, when you don't have a realtor that is working for you, you will feel it. What I mean by that is you want a realtor who is going to do everything possible to try to get you what you want and for the price that you want. We had an experience with a realtor who was great overall, but we had to really push this person to get us the home that we wanted for the price that we wanted. And it was like this agent kept coming back and saying, well, I don't think they're going to accept it. And we were like, go and make them accept it, you know? So, and the funny thing is they did accept it. So you really want to know, you really want to feel like your realtor is working for you and not just trying to make a sale and close a sale. So very important, do some research, find a good realtor. I think basically I covered everything that I can think of today. If you have anything else that you would like me to address, please leave them in the comments down below or message me on Instagram, as many of you have. And I hope you guys found this useful. So please let me know if there's anything else that you would like to know, and I will try to do a video of that for you as well. All right, thanks guys so much for watching. Please don't forget to subscribe and hit that notification bell, and I will see you all in my next video. Thanks for watching.